Thank you for calling. Please leave a message.
They build it, that's where I'm gonna go.
By why, I mean, what's your purpose? If you're gonna live to be in 2020, you might as well play to be in 2020.
We are one global community.
The digital revolution has just begun.
Andy, welcome to the Supercharged Entrepreneur Podcast. How are you?
Hey, Phil. Yeah, not bad at all. Slowly getting my head round the fact we might be escaping soon.
Escaping, indeed, escaping. So we're recording late March 2021, and Andy is joining us today as the poacher turned gamekeeper of the investment world, or at least that's the title I'm giving you, Andy. Forgive me, I know that's not a self-appointed title. Andy will give his own introduction in a minute, but I wanted to start with a quick intro, which is I've been through a few rounds of investment in a couple of businesses that I've been involved with. I've helped a few people kind of point them in the right direction when they're looking to raise investments. And I've been on a couple of sides, not quite your side, Andy, but sort of on a similar side to you in terms of taking on investments. Oh, sorry, giving out investment, forgive me. What I love about your story, Andy, is the journey you went on, and I'd love to start with that if that's okay. So tell us about how Andy started out as searching for investment and how that kind of manifested itself throughout the years to where you are today.
Yeah, no, that'd be grateful. I mean, I'm quite privileged in a way in that many years ago, and I probably don't count how many. I got to the point where having finished my PhD, where we were using microbes as a drug delivery vehicle, we managed to attract the attention of what I term a kind of boutique VC. So a VC that really had a sort of a view on certain specialist areas, particularly in the biotech area, that they quite liked. And within a period of what felt like a matter of hours, if not minutes, they parted with £500,000, which for a young 20-year-old having just finished your PhD, finish on a Friday, start on a Monday was obviously quite exciting, and very much that kind of the story you hear of starting in a garden shed and kind of working up to. Not quite there to the heady heights of being a multinational, but I think for a group of people who've never done it before, with some business leadership and some guidance from a chief exec who'd actually managed packaging businesses beforehand, we were quite successful in our own right. So it was a wonderful experience. We went from a team of 3 or 4 people to a team of sort of nearly 100. We shrunk the business back down to kind of 12 people. We went through the full roller coaster of, trying to build a business, and at that point, trying to get it on AIM. So we were trying to float the business at the same time as, progress a lot of licensing activities. We fell foul of a lot of common mistakes. So the business itself was based around a kind of platform of, being able to use a microbe across lots of different verticals for basically different delivery of flavors and fragrances and stuff. And we got massively carried away of basically trying to business development or do business development in about every vertical you could possibly imagine, which was great fun. And I had a great time traveling the world. I think, we managed to get into some of the most phenomenal organizations from, people like Bayer and Firmenich and Givaudan and Procter & Gamble and Unilever and DuPont. I mean, you name it, we pretty much just traveled the world trying to do this sort of business and had great success. The product didn't quite work out quite as well as we'd hoped in the end, but the business development activities were fantastic, and we raised considerable capital to do it. I mean, in the end, the business probably raised over 50 million in sort of 12 years. We did finally get the business floated, which is probably a little bit of an anticlimax in the end. It wasn't quite as exciting as we wanted. It took that long to get there. And we weathered a lot of storms. There were lots of positives in terms of being able to get license deals done with some amazing companies, and I think you and I previously chatted about the product still being available in Sainsbury's in a garlic and coriander naan bread. You can still go in and buy the product, and it was a fantastic experience. Equally, not without its challenges. I can remember a couple of months that I didn't tell my partner at the time. The exec team paid my mortgage because we had no money to pay the bills. So we'd we'd raised money, but equally people were putting their houses on the line and taking out bank loans and various things to keep the business going. So yeah, it was a lot of fun.
Wow. And some of that story resonates with me, not on the same scale, and I'm sure it resonates with lots of people listening, Andy. And let's not say Dragon's Den too many times during this chat, okay? Because I want to steer away from it. Aside from the stereotypes, that's a reality show, and it's not really an investment show. Just to clear that up. Let's chat about the lessons learned, Andy. You went on such a roller coaster. What are the takeaways that you said to yourself, if I did this again, I would do X, Y, and Z?
Yeah, I mean, it was a very different time, and I think raising capital was just so much easier, and I think there was a lot of capital around, and we were in one of those lovely sort of sectors where every VC around, and even some of the PE guys wanted a slice of kind of UK biotech. And we probably weren't as traditional on the sort of therapy side, but as a delivery platform, and everybody loved the word platform because it was that usual. What it actually means is you've got multiple shots on goal. If one sector doesn't work quite well, surely some of the others will. I think the reality is that we were massively unfocused, and we had a huge amount of fun chasing a lot of projects that probably never really turned out. We'd spent a lot of time trying to scale the product. That was another thing as well, was, when we got our first investors, I think in terms of our actual capability to manufacture anything, either ourselves or through third parties, I think we'd made roughly about 2 or 3 grams of the materials we were using. And suddenly we were talking about how do you get to volumes on sort of 1-ton quantities. What was fascinating was nobody in the organization had any form of engineering or process scale-up skills. So it was kind of left to me. That was my first job, was can you get it off a bench? And can you go from a couple of grams to essentially making tons? And we found third parties, one in Ireland, one down in Kent, who helped with a lot of that kind of initial sort of early process development. And then we spent a huge amount of time transferring all that knowledge over to licensing partners, which again, I pretty much had to do. And I think that's definitely one of the lessons. We were quite a big organization in the end. I think we probably had some functions in there that, looking back, we probably didn't really need. There were more fundamentals in the business that we missed. So, we had great levels of marketing collateral and all that kind of lovely good stuff to generate interest. Equally, we didn't have anybody who had any real dyed-in-the-wool process development experience. We had some, amazing equipment that we'd basically purchased. We had a fantastic facility. We probably could have done quite a lot of that without having any of those additional overheads. So we kind of got carried away and grew too quick. We were pretty unfocused in terms of sectors. And it really sort of boomed quite quick. So our ability to raise capital was quite easy, so we grew quickly. And in hindsight, we probably squandered quite a lot of that early capital and those early days actually. And it was really over a period of maybe another 24 months where we really started to hone exactly what the product was good at, and really spend much more concentrated time in specific areas that we actually started doing some deals. But it was I think even some of the businesses that I see on a regular basis, a lot of them do go through this kind of classic, do everything, try and find the bits that stick, and it's just kind of natural. I think a lot of the time, particularly with more platform oriented technologies, there's a lot of the time there's not that kind of obvious win.
Yeah. There's so many lessons in there, Andy, and you talk so nonchalantly about all these lessons, and I completely understand why. And once you've been around the block a bit, and once you've earned your stripes and you've taken the knocks, you look back, and I know you and I were chatting previously about, you almost have to laugh about some of the stupid things that you do, and it's not through stupidity. It's largely through naivety, and it's largely through just learning a different way of running a business or growing a business.
One of the classic ones was, we retrofitted a laboratory and an office into an old building that belonged to Marconi, and it was quite sad. We were all excited about moving into this amazing facility. On the day we were moving in, a lot of the Marconi staff were moving out. And the car transporters came and took all the sales guys' cars away, and that was quite sad. We renovated this 12,000 square foot building and built our own sort of state of the art facility inside. And we made some wonderful errors. I mean, we made an error on the air handling unit, which I always remember. So we were doing trial runs of encapsulated garlic and onion. Clearly, we were following all the USHOT guidelines on health and safety and all that kind of stuff. But equally, a lot of this sort of very volatile material, these very volatile sort of smells, were escaping from the room, and they were leaking out into the car park and then leaking out into the local environment. And one time, I mean, we were on an industrial park opposite Haydock Racecourse. So one lunchtime, while I was running one of these manufacturing runs, the local fire brigade turned up to find the gas leak, and basically it's the smell of the garlic. And even on the local radios, they used to call the Haydock roundabout. It was, what smell can you smell at junction 23 of Haydock roundabout? And it was me. It was what's Andy making it? And we were completely hidden. Nobody knew what we were doing. So when we had all those kind of sort of classic, early business problems that a lot of us had never really encountered before, and just kind of muddled through. Equally, at that point, we were desperate to do a deal. So there was a lot of long hours, a lot of commitment from both the commercial and technical people to get stuff done. And signing our first real commercial license with a grown-up company that was Firmenich in the end, who make a lot of these flavors and fragrances. So a lot of the the sort of materials that you see flavor-wise on things like Pringles, which is Procter & Gamble's sort of product. A lot of those sort of flavorings that go onto those things in ready meals, they were all us.
Wow.
Yes, hiding from the local fire brigade was fantastic.
So you've gone from a 21-year-old graduate, forgive me, doctorate, £500,000 of investment pretty much the next day.
Yeah.
You're growing a company, you're scaling, you're making mistakes, you raise more cash, you then get listed, then you have to kind of exit yourself out of that business eventually, as most people do when they're on the investment track. How did you get from Andy the entrepreneur to Andy the gamekeeper? How did you flip to the other side of the fence? What was that journey?
Yeah, I suppose it's kind of the light side of the dark side, as far as probably most of my investing companies think. And it was a little bit of that. It was a little bit of that. I suppose I always found that working in an SME or a small business, one month pretty much felt like a year. It can be quite stressful. It's quite hard work. Constantly dealing with investors and everything else was quite tough. And I was really lucky. I was recruited out of the business, which was called Mike. I was recruited out of it by two of the DuPont family members that had a boutique consulting business, and their real experience was around helping large blue chip companies look at their assets and basically how could they turn them into either spin out businesses, either spin outs or spin ins, and could they raise additional capital for them, and potentially could they license them. And they were looking for people who had experience on exactly that side of the pressures of kind of dealing with small companies. And a lot of those large organizations then started to see the real value in some of these small companies they were coming across, but had no idea how to talk to them. Even just simple things like trying to get a non-disclosure agreement signed or a material transfer. These small businesses were looking at these large sort of the DuPonts and the DSMs and the Unilevers of the world, and a real complete lack of understanding of why they couldn't turn documentation around within a day. It's like, well, you do realize there's 25 layers of lawyers that need to basically sign this off. And if you get something back in a month, you're doing really well. So they were looking for people that had had the experience of working with small ones. And we spent a lot of time kind of mentoring and actually educating those companies to just make that sort of transition of how they were working with each other just so much more easier. So I did that for a number of years, both in the UK, and then was fortunate to do quite a bit out of the office in Boston and also Tokyo. And that was great fun. And that was, again, it was a little bit not quite as much kind of gamekeeper as I am now. It was a little bit sort of in betweeny. And then I was very fortunate that a friend of mine, and actually an ex-colleague of mine, an ex-boss of mine, ended up with a very senior role at what was called Techtran, that became IP Group. And he basically said, look, I probably know as much as you do about venture capital. Do you want to basically come across and learn it on the job? It's probably a bit mean. I think he knew a bit more at that point. So I went to join, as I say, TechTran that became IP Group, which is a phenomenal business. I mean, IP Group at that point had essentially an exclusive license or an exclusive deal with pretty much 10 of the top UK universities to look at investing in their intellectual property. And we kind of fitted between the sort of tech transfer groups and sort of traditional venture capital. So we provided capital for good ideas, turned them into businesses. We worked with the academics in terms of, kind of upskilling them, supporting them where we could on, this is what a balance sheet and a forecast looks like. This is how you set a business up. We sat on the boards and I did all that sort of additional sort of added value stuff, as well as basically, providing the capital. And that was fantastic. I mean, we saw just an amazing amount of new technology. I think at one point we looked and we probably thought that between us all, we saw, over $1 billion of sort of UK research basically came across our desk.
Wow, that's fantastic, Andy. And when you play back your career, it makes logical sense. You started out as an academic, basically.
Yeah.
You jumped other side of the fence again to become an entrepreneur. You then got hunted for what is effectively a technology scouting type role, scouting and negotiating technologies between the large corporates and the SMEs, which again, as you say, is all about understanding the differences and the nuances between big and small organizations. Then you've got the move to the technology transfer, which is kind of, again, slightly closer to the investment arena, which is more about upskilling the people who have got the knowledge with the finance skills, I guess. Yeah. And then you find yourself Spark Impact, MSIF, Maven, and now at Protoura, as the head honcho, as the main man. So let's skip forward to today, Andy. What's your day look like? What's the average day look like at Protoura, and what does Protoura do?
Where Praetura kind of fits in the venture market is, we're probably somewhere between people may have seen these sort of more sort of local sort of sector specific or local funds, sort of the Northern Paris Investment Fund type things. We fit probably a little bit after that in terms of company stage development, and probably a bit before the kind of the more VCT funds. So we will look at businesses that are kind of pre-revenue. We will look at ones that obviously are not quite yet profitable. There needs to be a kind of clear feel within the business that there is some genuine momentum. So they are making real progress. They're not kind of stuck. We need to massively want to get on with the people. I mean, that's a big, and it's always said, but it is a massively important factor. If we don't think from the offset there's any kind of real chemistry, or there's a few warning signs, then we're going to be in this for 8 to 10 years. Then better not to do it now rather than worry about it later. It's a marriage to some extent. We do like businesses that kind of, particularly on the more sort of tech side and the more sort of SaaS side, those businesses that have got a sort of an annual recurring revenue kind of element. So there's a little bit of protection built in there in terms of revenue coming in. On the healthcare side, which is where I spend most of my time, we're quite a broad church. I mean, we'll look at pretty much anything in that kind of sector. So at the one end, relatively non-complicated sort of medical devices. Maybe things in the kind of implantable market, so stents and various things we're quite interested in, all the way up to sort of therapeutics. Probably won't do too many sort of basic therapeutics businesses. We leave that to the big boys who have much more capital, but there's kind of a nice sweet spot in the middle that's kind of that lovely kind of crossover area of potentially companies that are developing over-the-counter medicines where the regulatory framework is still complicated and it's got a hard bar for it, but those medicines are probably pretty much already there. And on the devices kind of area, I've got a real interest in kind of the wound care area. We've done one wound care business, and I'm looking at a couple more at the moment. But it's kind of a nice area. Everybody kind of needs it. There's lots of market demand, and to be honest, there's quite an easy kind of sort of progression, and there's an easy kind of route to market. Everybody understands the kind of framework of how they all get paid and things. And I think a lot of the time for investors, if you've got that kind of clear roadmap, those are the ones that you really kind of try to look for. And there's, at the moment, It's not that we have the pick of every deal in the market, but there is still, as there always is in the UK and has been for many years, a shortage of capital. So we are quite privileged to be able to kind of look for things that we want to do.
Yeah, I think you touched on something really interesting there, Andy, and I want to shift focus slightly to how Protoura, in this instance, raises money, because I think it's something that I didn't understand, that I didn't really appreciate when I first went to raise some cash. Just talk us through, is it your money or is it someone else's money? Where does that money come from? Where does it go? Who manages it? Could you just talk us through that process, Andy?
Yeah, no problem at all. So we traditionally raised money through sort of high net worths or people of significant sort of wealth that have got their own money and are perhaps looking to deploy it either in a fund or even against individual ventures. And they come in lots of different sort of shapes and sizes in their how much money their ability to invest. A lot of the time they tend to be people who've already had a successful business, or they've had one of those super duper sort of blue chip careers and have had the fantastic bonus payments. And in a lot of time there's kind of a mixed kind of group. I think there are, without being too dramatic, I mean, there are those people who are willing to invest, and there's more sort of tax planning associated around it, and that's perfectly fine. We're blessed in the UK with schemes like SEIS and EIS where people can get some tax relief, and it's great because it does allow managers like us to raise money from those sorts of sort of structures and funds to then be able to deploy into businesses which hopefully employ people in the UK, and it's kind of a nice sort of virtuous circle in terms of benefit to UK PLC. There's also groups of people who are willing to do those sorts of investments, but equally have a real keen interest. And Praetura has been really good at kind of building that network out. So we've got 40 or 50 individuals who have paid not an unsubstantial amount of money into funds that we've helped raise, and they have a much more active participation in the companies. So they'll help and give advice on sort of the strategic focus of the business. Is the marketing correct? If they've had businesses in those areas, we can introduce them to the founders and spend a bit of time with them. And there's that sort of mentoring element as well. Equally, the whole sort of corporate finance piece as well. If you've raised money for a similar business before, you kind of know where to go, where not to go. And we kind of, it is a little bit cheesy, that kind of added value or more than money piece. But I think for us, that's probably more our kind of interest. Raising capital stuff. Investing the money in businesses is, it's not a complicated process. Managing those businesses, shaping them, and getting them to potential exit, that's kind of where the clock really starts. Putting an investment together, yeah, okay, it takes you a couple of months worth of diligence and stuff, but you're still then some many years away from exit, and that's the bit that, I think that's the bit that I personally enjoy. I think it's where sort of Praetura's strengths are as well, is making sure we do a good job of that.
Wow. Okay. So fundamentally, I'm going to oversimplify it to make the point, Andy, forgive me. You are a very high functioning introductory service at one end of the spectrum. And at the other end of the spectrum, you are consultants and advisors helping company owners take their business from X to Y, which in theory increases the value for everybody, and everyone benefits from a bigger exit at some point in the future.
Yeah, exactly. And obviously we get paid along the way, which is always useful.
Yeah, well, but we all have to get paid.
Yeah, and equally most venture firms, in terms of the funds they build, there's a bit of sensible built-in incentive in terms of upside and carry and stuff. So it's that usual principle that everybody needs to be aligned of where we're going to ultimately, hopefully, get to.
So I love what you said before as well, Andy, about the chemistry fit and about investing in the person or investing in the leadership team as opposed to necessarily the business plan. Where on the spectrum, so sort of 0 to 100, how much of that decision is chemistry? If you give me a number over the last 5 years, what would it be, Andy?
It's a lot higher than probably anybody will ever admit.
Yeah.
It really, really is, and it's probably right and wrong in kind of equal measure. That first impression piece is phenomenal, and you just, it's one of those things. The older you get as well, the more attuned you become to some of the sort of peculiarities of people. They're just the way they present themselves to you when you first meet them, and you can kind of you can kind of almost get a sense quite early on kind of how that relationship is going to build. And I've made some wonderful errors over the year in partly thinking sometimes I still like the business well enough. I should probably still do it. And I know there's going to be some issues. I reckon I can deal with it. And I've got it wrong. In my face. I think of two, which I won't name names. I can think of two where they just went spectacularly wrong. And it's a little bit of that sort of, I sort of had to have a word with myself afterwards that I won't do it again. I probably will, and I think we're all human, and you do make mistakes. But that human capital element of these things is really, really important. And I mean, I experienced on the other side with my cap. Your relationship with the investors is very, very important. The relationship with at that point, the management team who were working with us was very, very important. And it doesn't take much to kind of upset it all. One or two people who really don't fit the culture or really aren't quite aligned to what you're doing, they can do quite a surprising amount of damage. And, there are, I won't say the crooks out there, but I think there are people out there who are quite skilled at, and not even deceiving venture capitalists, but equally on the venture capital side, you can't ever know the business as intimately as the people inside it, and you're kind of taking a bit of a snapshot view of it is where it is now. I've kind of got a view as to where I think it's going to get to. Until you actually put your money in and you become more on the inside, there's always things that you'll find out that you kind of sometimes wish you had done previously. And that's just the nature of it. It's just trying to make sure you don't have too many of them.
Yeah. Which brings me on to my next obsession, which is the need for due diligence in the investment process. One of the strangest and most frustrating experiences I've ever been through. Why do different companies take such a different approach to the due diligence process, Andy? And what are your thoughts on why it's important or not important from your perspective?
I think a lot of the time it depends on the nature of the fund. Equally, the timescales with which you've got to deploy that capital. And various things like how much capital you're kind of deploying as well. Although I think a lot of the time, the diligence you would spend on maybe doing £500,000 half the time is pretty much the same as it would if it was 50 million as opposed to 500,000. So sometimes there's not much difference on the quant side. Investors have sort of varying degrees, I think, of kind of personal experiences of what's been important to them. There are some of the basics. I mean, some of the basics of corporate and financial diligence and legal diligence that doesn't really change. Do they own the shares? Are they able to transact? What's the previous history of the business? I think all those are pretty standard fodder. And some VC firms and PE firms will go into that a lot more detail than others. Some will take more of a gut feel view, particularly when it comes to the people person. And I've seen some firms, put founders through, proper grown up psychometric tests, spend £5,000-10,000, come up with a nice report, and you look at it and think, I'm not quite sure what value you've got out of it. You kind of knew all that before you started, but at least it's kind of reassured you to some extent that it's kind of said what you thought anyway. I'm not massively a fan of those sorts of things. I think you can kind of get a feel. I think if you've got a business had investment before, most investors tend to be very honest with you. There's not many who'll say, yeah, they're a great management team if they're not, with a view to just getting your capital. The market's not big enough to be opaque. You've got to be pretty transparent about these things. What we try to do is take a sort of top level view of what are the kind of key elements that we need to look at that maybe are bigger than just looking back through 2 years of the management accounts, or looking at sort of where they were in terms of their contracts and things. I mean, you can do all that kind of nice stuff. So I've got a couple at the moment where we've got sort of bigger pieces of work around regulatory approval of a site that they use for manufacturing. That's a key piece of work. We've asked a third party to come in and look at it. They've written an excellent report on what they think, and it kind of just gives us a bit of a view in terms of confidence of that particular facility and that particular business being fully approved to manufacture those goods. And you can kind of look at it and say, okay, it's roughly think about 80% chance of passing this time round. If they don't, and it's delayed by 6 or 12 months, that's additional capital the business will need before it can start and sell those products. So you try to, in my case anyway, I try to find those kind of key bits that really are those kind of go, no go kind of points. And that's I think is probably more interesting than, well, it's more interesting for us anyway, but doing those bits as well as the more mundane things becomes pretty standard. I say that the fixed stuff.
So there's kind of two elements, isn't it, Randy? Forgive me. There's the stuff that every entrepreneur should really have available semi-readily, such as accounts and shareholders agreements, etc., etc.
Yeah,
and
put your data together and make it easy.
Yeah, put a mini data room together. So forgive me, the data room is a place where you store all your documents that other people can access securely, basically. But then there's I think the more investment ready type side of the due diligence process, which is, for me and in my experience, Andy, I'm sure you'll agree with this, I think it's about taking professional advice. I think it's about having a really good lawyer. I think it's about having a really good finance person. I think it's about having some sort of non-exec or a chair, someone who's kind of been through this journey before. And it's all the unknowns that they're going to start pulling out for you, isn't it, Andy? It's the be prepared for this question, be prepared to plan X, Y, and Z. And I wondered if you'd just share some thoughts, experiences, stories, perhaps, Andy, about what investment ready looks like, and perhaps maybe when you've approached somebody and you've thought they're not investment ready. What are the things you look for beyond the finances and the legals, Andy?
Yeah, I think you've nailed a few of them straight away. Which is, I'm not a great fan of doing a business that doesn't have a kind of separate finance function. I think entrepreneurs, great. A lot of them tend to come traditionally from more sort of technical orientated backgrounds with a good idea. Having that sort of finance function built in, that somebody else is helping them put some of their models together and all that kind of stuff, that's a big plus. The chair and non-exec, I'm a massive fan of. I think we at Praetura kind of tried to promote that as well. Most of the businesses I've done have always come with a chair, or we've kind of got to the point of, we'll do the investment, but you will be taking somebody on. And you're right, having somebody in that kind of role who can mentor the founders a lot of the time, and stop them phoning me at midnight to cry when things aren't going right. It's always a bit of a boon as well. I mean, that's the other thing as well is, for investors, you get stuck into these businesses, and a lot of the time you're providing the capital, but at the same time, you're providing the capital, but at the same time you are providing your time in trying to help those companies. And the bigger the portfolio, the less time you have, and sometimes it's the ones that are probably more difficult and don't ever really give you the return and maybe take up more time. But you can normally tell the sort of investor readiness kind of stages. Have they got a good set of financial models? Do they know kind of route to market's a big thing, and I think it's become a bigger thing over the years. And genuinely, do you know who your customer is, what they're going to pay for it, how you're going to get them? In the world of sort of more life sciences, what are your insurance codes if you're going to the US? Again, what does your clinical trial look like? How big does it have to be? What does the regulator think? What's your kind of pricing structure? Where are you going to get to on your cost of goods, and kind of where do you need to be in order to get anybody to actually want to buy it? And a lot of companies do kind of still get trapped in this kind of issue of, we've made a product, it's really good, everybody will want it. And you look at it and go, yeah, I'm sure everybody will want it, but are they going to pay for it? Is it usable enough for them to want to? What does the training look like? What does the follow-up look like? And I've done quite a few medical devices, and a couple in particular where there's an absolute no-brainer from a clinical point of view as to why you would not use these devices. But if they don't fit neatly into kind of a patient healthcare pathway, it's all well and good that they're really good, but they get left in the drawer. And there's all these sort of nuances that I think in that kind of route to market piece kind of needs to be built in. And that's a lot of what we spend our time on is looking at that and kind of critiquing it. A lot of the sort of other stuff that just the basics of running a business, and you can kind of You can find people to help you do those aspects. Um, and over the years, it's become more and more obvious that finding those entrepreneurs who've maybe done a business before, even if it's failed, but they've got that kind of learning is really, really useful. And if you can put that on, like say, with a seasoned professional who maybe will give you, a couple of days a month to help do the sort of steering rather than the driving, those are phenomenal people to find.
I'm a huge fan of the saying that it's great to learn from one's mistakes, but it's even better to learn from other people's mistakes.
Yes, yeah, and somebody else's money is even better.
Or someone else's money, absolutely, yeah, absolutely. So yeah, I couldn't agree more, Andy. Couldn't agree more. And I think my kind of closing thought on this kind of section about raising money is one of the things that I know investors are looking for is their own exit, because I think that's fundamentally the most misunderstood part of investment. Is you are approaching an investment company to raise £500,000, probably as part of a 5 to 7 year fund. Now, fundamentally, Andy, that is people have put a pot of money together, let's say 10 million, and the idea is to exit that pot, to sell everything in the portfolio or sell it on for 20 million within 5 years. So talk me through the importance, Andy, of thinking about your next exit when you're raising investments.
Yeah, I mean, it's the exit thing is quite an interesting one, and I've seen a lot of investors kind of sometimes start at that phase and work backwards. And again, a lot of it is, where do you think you can grow the market to, of the business to? Are there any precedents? How does your business maybe disrupt the market in such a way that it's become a campaign for somebody else? So it's obvious that somebody might want to buy it. For us, putting a fund together, obviously funds have different kind of timescales and different lifespans. Some are a classic sort of 5-year investment period, a 5-year realization, maybe with a 2-year extension. So you can do, I suppose in that case, you get quite a lot of your early investments out of the way early on, knowing full well that businesses might take 8 to 9 years to mature. You might reserve maybe half your money for follow-ons because there's going to be multiple rounds in there. And that's a naivety I think that companies come to, but also investors are quite naive sometimes as well, as to the time it takes plus the additional capital that's required to try and get to sell the business. And then there's that whole issue of built into all that. There's that extra layer of, as the businesses progress, hopefully if they're successful, they can raise more capital at a higher valuation as opposed to a lower. And who can you kind of build in to kind of share a bit of that burden with you? So the capital exposure risk of you starts to go down because people are sharing your burden. And equally, the capital exposure risk of the business is kind of going down because they've got more than one checkbook. The worst case for VCs is, you've got a fund, you've invested the majority, you've got a big portfolio, the portfolio is hungry and needs more cash, and you pretty much don't have any funds to protect yourself, but also the business. And if they haven't performed very well, somebody else comes along and gives you the joy of a down round. You've then got to balance your kind of down round against the businesses that are obviously progressing, and then you sort of have that dynamic of then tying in things like portfolio time. Where do you spend your time? Do you spend your time on the really successful ones, because there may be only 2 or 3 in a portfolio of kind of 20, or do you really try and rescue the ones that are somewhere in the middle? And what I love about portfolio management as well is you do kind of look at that dynamic. You have your 2 or 3 stars. There's a big chunk in the middle that have got value, but maybe haven't quite got there. And then you've got your sort of D group, your D for dogs. And you kind of, and again, sometimes they've failed for very odd reasons that you talk about diligence that you would never have thought of, 4 or 5 years ago before you put your money in. So again, you can do all the obvious things, but there'll be, for some of them, there'll be some reasons they just don't succeed.
Give us the top 3 reasons why companies don't succeed, Andy, in your experience.
The top one is always the people. Every time it is genuinely all about the people. I mean, there's an old adage of knocking around with, top team, mediocre technology, you'll get a great exit. Not a great team, fantastic technology, they still won't give you a good exit. It is genuinely about the people, but they fail in their inability to raise additional capital. So they haven't gone far enough in the capital they've got to hit a value inflection point to be able to raise more. And in some cases, technically, they fail. And it's a funny thing, but in the years that I've been doing it, if they're gonna fail, I'd rather that they failed technically. So they've tried their best to get something to work, and at the end of the day, maybe just fundamentally, you can't get to do exactly what you thought you were able to. You're kind of almost there, but not quite. Be it you just you can't be accurate enough, or in diagnostics you're not specific enough for maybe the molecule you're looking at or the compound you're looking at. Great, you've tried to do it, we're almost there. As opposed to founders fighting with each other, shareholders just not getting on, or actually just the business has become too difficult for you to work with. Those are the crappy ones.
It's fascinating, Andy, and I'm sure we could go on for another 2 or 3 hours about all the reasons why businesses both succeed and fail. But I'm conscious that we can only squeeze a certain amount into a short podcast session. I would love just to sort of round off the session, Andy, with your thoughts about the future. We are coming out of this pandemic. We are hopefully going to see, a bit of a tumultuous 12 months, I'm sure, but at some point we will bounce back. What's your perspective of the investment landscape and of business landscape over the next 12 to 24 months, Andy?
I think the feeling already is that things are going to pick up. And I think the last 12 months has been tough. It's been tough for companies raising cash. Equally, I think sometimes they forget it's been tough for investors that are out raising cash. And, it has been hard. The sort of conservatism definitely increased people's ability or their desire to want to move money out of maybe a more kind of fixed asset into something that's probably a little bit more fluid, sort of investing at sort of the stage of businesses that we do. Why would you just leave it where it is and hope you get a good return that way. So that's been quite tough. I think the government's actually done a pretty good job. Some of the schemes that have been pulled together, that British Business Bank have helped sort of pull together. So the C-bills kind of loan scheme, that's worked quite well. Future funds, sort of equity fund on the sort of structures that they've created, that's been quite good. I mean, we've done a number of investments where we've managed to attract another investor with future fund money, and that's been good. It's just kind of helped sort of grow that kind of capital base that if you've got a round of sort of 2 million, you've got £1 million left. The future fund has done a great job of filling that with relatively sensible terms and quite easy to kind of work with. It hasn't added another 12 months to the process, which has been great. I think going forward, the capital hasn't gone anywhere; it's still there. And I think for good opportunities, there's more than enough money. There's still enough money. And I think if you've got money at the moment, there is an opportunity for you to be able to cherry pick, the real high quality ones at decent valuations as well. I mean, we've seen, sensible revaluing of businesses. I've seen some absolute corkers over the past couple of months that have maybe been raising money for a year and probably trying to raise money at valuations which are a nonsense at the moment, particularly when there is that kind of reluctance to want to commit. So there's some great deals to be had, and there are some new funds starting to emerge as well. Some of the VCT guys have got some new cash. Some of the sort of LP, GP type funds looking around have started to come online. I've seen even a few sort of European funds get raised, that are good 100, 250 million. So I don't think it's probably quite as bad as people kind of fear, but there is definitely an increased level of conservatism. I'm just kind of hoping that disappears. But sector-wise, I mean, everybody was excited a year ago about getting into vaccine business or PPE or anything in the sort of COVID diagnostic world. That will continue. It will obviously drop off over time, as we start to get to a different form of normality. Although it sounds like some of those things are going to be with us for quite a while. So I can't imagine we aren't going to be doing the odd lateral flow test every now and again, or walking around with a mask in the next several years. and probably getting vaccinated for a different COVID variant once a year, like you do with the sort of standard influenza. I think all that will continue, but anything in digital healthcare, anything in access to medication, those sorts of areas have come on leaps and bounds in the past 12 months. The barriers for adoption, particularly around sort of digital health, have just been blown apart. There's now no excuse for those sort of doubters that are in the middle who probably put some roadblocks in the way of we've never done healthcare like this before. I think they've been told, well, you kind of have to because there isn't any other way of doing it. So there are lots of businesses that have benefited, that have been in that kind of sector at the right time, and we've seen a few, which is great. And it is that thing, there are certain sectors who will benefit from, or have benefited from the last year, and certainly will continue to benefit as things change.
That's brilliant. It gives us cause for optimism, I guess, is the takeaway from today, Andy, is that the investment market is constantly shifting. But I think you make a very, very good point that I think the market is slightly more optimistic than perhaps the popular press would like to have us believe. So,
let's be honest, if we have to have a wet holiday this summer, never mind.
Yeah, we'll all go to Bognor Regis or Skegness, like we did in the 80s.
Yeah, exactly. It feels very much like, doesn't it? It's almost nostalgic.
It is. It's going back to our roots. It's going back to those terrible caravans we all stayed in the 80s and 90s. Yeah. Andy, it's been a real pleasure speaking to you today, and thank you so much for your insight and for your candidness about the investment journey and for how entrepreneurs can go about seeking investment now. If anybody wants to get in touch or learn more about what you or Protoura do, how do they find you?
Yeah, we've got the usual sort of website, so www.Praetura Ventures. I'm going to say .com. I'll have to check, but it's either .com or .co.uk. I'm sure you type in Praetura Ventures into Google, you'll find it. Equally, my email address is andy.round@praetura.co.uk, so feel free to drop me an email.
Andy, thanks very, very much for your time today. It's been an absolute pleasure.
Yes, thank you for your time as well. It's been great.